Time now for the markets with Leighton. Are you a poinsettia man?
I am. You know, if you're somewhere you can't put up lights, they easy way to add a lot of color.
Well, here you go.
Yeah, I like poinsettias, but that question always comes up.
It
Are
does,
they poisonous?
Are they
Yeah.
poisonous?
Well, let's turn to the markets. Tuesday's crop report left the size of the U.S. corn and soybean crops unchanged from a month ago. And coming up now, why cotton prices are kind of stuck. Meanwhile, cull cow prices are described as low and going lower, while China is buying U.S. pork despite the trade war. Cotton is an uncertain market as we approach the final 2 weeks of this year. The trade tariff problem with China is now being exacerbated by the arrest of a Chinese technology official in Vancouver at the U.S. administration's request. Then add a new crop report in the mix just to increase the market pressure. That report, by the way, increased U.S. production by 180,000 bales. Nolan Cullen gives us the big picture of what's going on and what may be ahead for cotton.
Well, I think there are three big factors. One is the tariffs. Number two, rising interest rates relative to the rest of the world. And probably number three is the value of the currency. Certainly, the tariffs, if they were removed, would be a very positive impact for U.S. exports. In fact, before the tariffs were actually imposed, China indicated they would be willing to purchase more cotton. So given we can remove that barrier of tariffs, I think it would be positive for into the first quarter looking for U.S. exports. It's a time of the year, we put in harvest lows, seasonal lows, so there's a good chance here we're seeing the annual lows come into the market. We get the year end, start a new year, the outlook would be somewhat more positive for some type of technical rally in the cotton market. We've had a cotton market trending down. The first of the season, the market was up. We were having weather problems domestically worldwide. We've thrown two massive hurricanes at the cotton crops in the southeast, and we normally think 2 plus 2 should add up to 4. Certainly the cotton market's price action did not follow that scheme. As been discussed, we've got three factors. Number one is interest rates. The Fed is raising interest rates to go to a neutral posture. We're seeing the value of currencies affect foreign business, the ability to buy our exports. And finally, the tariffs. Even though the tariffs don't specifically apply to cotton per se, removal of that would offer opportunities for foreigners to be buyers. Those three influences don't appear to be going away anytime soon, but we would still think that seasonally we tend to see harvest lows put in fourth quarter of the year, and the markets tend to attempt to rally as we go into the first and second quarter and we begin to plant new crops.
Economist O.A. Cleveland shares the view some positive developments on ending the tariffs would definitely help bring back price stability to cotton. Dr. Cleveland notes the technicals of this market remain neutral, but it is the tension that we've talked about between the U.S. and China that is unsettling to traders and putting many on the sidelines for now. Supply factors are bullish for cotton, but demand for the moment remains weak, Dr. Cleveland says. Well, time for today's trivia quiz on our Farm Week program. We're talking about a food item used a lot during holiday baking, eggs. And here's the quiz question. How many of the eggs sold in the U.S. are cage-free? Is the answer A, 4%, B, 10%, C, 18%, or D, 23%? We'll have that answer coming up. We begin the second half of the markets with livestock. Cull cow decisions this year continue to be complicated by low prices. Cow slaughter is seasonally higher during the last 3 months of each year as producers make decisions prior to winter. Extension's Josh Maples says the low cull cow prices are definitely hurting producers' bottom line.
So I do expect we'll see some higher prices come springtime whenever ground beef demand cranks up. But it's a big, important question. You know, cull cow sales are important to producers' bottom line. You don't typically plan on culling cows, but when you do, and you know you'll have to at some point, getting these really low prices we have now is really hurting producers' bottom lines at the end of the year.
Why have there been more cull cows this year?
So there's a couple of things. So probably the biggest one is we just got more cows. You know, the total number of cows in the country is higher. If the culling rate stayed the same on a larger herd, then that's going to be more cull cows. So that's probably the biggest aspect. We've also seen some increased culling from dairy herds due to a very tough dairy market environment. So that's pushed more cows into the market. Those are probably the two biggest factors that have really pushed prices really low this year. At this point, prices would almost have to double for us to not consider them as low. So that's the environment we're in right now.
The uptick in imports of U.S. pork by China continues, largely believed to be the result of the spread of African swine fever. A new assessment by Iowa State University economists finds that the disease was first seen in smaller hog operations in China, but has spread to larger ones now. Elaine Cubb says this comes at a good time for U.S. hog producers.
Hogs are in a wonderful position to respond very quickly with big gains on Monday, especially these nearby contracts. They're at such a strange spread structure when you look out to the summer contracts. You could easily see them pop up and continue rising $10, $20.
Well, a quick look back to the trivia quiz now to wrap up our market segment. Our question again, it's about cage-free eggs. The answer this week is C. 18% of the eggs sold in this country are cage-free.